How to trade using moving average envelopes. Well, first it's important to understand what moving average envelopes are. They are a tool to confirm trend direction, but can also be used in a sideways market to identify overbought and oversold levels. So let's get into it. Looking at this chart, what do you see? Well, you see a moving average envelope. You have a blue line, which represents the moving average. This is inside the two other lines. And this is used to confirm the trend. And you have these lines here, this one and this one. This is the upper envelope. This is the lower envelope. And these can be used to identify overbought and oversold levels. Moving averages make up the key part of moving average envelopes. And so moving average envelopes can be used as a trend following indicator. The direction of the moving average determines the direction of the moving average envelopes. So when the envelopes are moving higher, price is in an uptrend, and when envelopes are moving lower, price is in a downtrend. When the envelopes are moving sideways, price is neither in an uptrend or a downtrend, as you can see right here. And so the trend is neutral and price is considered directionless. You should always pay attention to when price moves above or below the envelopes, and we'll cover that now. Which when trends start, they usually start with a strong move. And so as you can see here, price surges above the upper envelope, and so this would be considered bullish. But at what point would you enter the trade? Well, you can enter the trade here, or a better entry would be waiting for two candlesticks closing above the envelope. 1, 2, or 1, 2, 3, all good entry points. What happens if price plunges below the lower envelope? Well, that's bearish. There's been a strong move to the downside, and price closed below the lower envelope. So this would be a great opportunity to sell. What happens if there is no trend? Well, we could instead use the moving average envelopes as overbought and oversold levels. But you should make sure that price is directionless, as a currency pair can become overbought and remain overbought when there is a bullish trend, and it is a very strong trend. You should remember this. And the same goes for being oversold. In a strong bearish trend, something can be technically oversold but remain oversold for quite some time. So it's best to pay attention to the slope of the moving average and make sure it's flat. And now you should then confirm overbought and oversold levels. As you can see right here, you can enter a buy right here when the price touches or falls below the lower envelope, then rises back above. So this could be a good opportunity to enter a buy. And when would you enter a sell? Well, when it touches or rises above the upper envelope, like it almost does over here, then falls back down. So this would be another opportunity to sell. Thank you for watching. I hope you enjoyed the video. You should now be able to use moving average envelopes in your everyday trading. If you enjoyed the video, please do show it by liking and subscribing. And once again, I'll leave you guys with a quote. The only way to do great work is to love what you do. If you haven't found it yet, keep looking. Don't settle.